Hello, my name is James Shaw and I'm an operating partner at Morrison, based in Singapore. Today I'd like to share with you some background about Morrison and what we do, and also to introduce the Morrison Value AddⅡ Fund. Now, Morrison's commitment is to investing wisely in ideas that matter. Our focus is on businesses that combine infrastructure fundamentals with solutions to challenges like decarbonisation or demographic shifts and resource constraints. That means the essential systems that every society needs: energy, water, transport, and in emerging needs such as digital and data infrastructure and the global energy transition. Unlike broader multi-asset firms, we focus solely on infrastructure investment and asset management, the sector that we know best. We invest to grow these enterprises for the benefit of both society and investors. Since 1988, Morrison has now grown to $30 billion in assets under management, delivering annualized returns of 18% for one of its longest-serving strategies over 30 years. With half the firm owned by staff and the balance held by our founding families, Morrison's culture is deeply aligned, collaborative, and long-term. We operate as one global team with a single investment committee and shared incentives, directing capital to the best opportunities worldwide. Because when we do well anywhere, we do well everywhere. And so do our clients. Responsible investment is also central to our approach. It's not a moral crusade, but rather sound risk management that builds value across market cycles. Infrastructure assets are the foundation of every functioning economy. When we invest, we act as custodians, building value rather than extracting it. That discipline has produced net returns of 24% over the past 5 years and 18% since 1994. That is a track record that we are really proud of, and one that we are looking forward to building upon. Now, importantly, the vast majority of Morrison's deals, that's over 85%, are sourced directly outside of competitive tenders, which is a testament to the expert networks and the trusted partnerships that we have globally. Morrison is one of the world's largest specialist infrastructure managers, and we've operated in Asia for nearly 20 years. In 2022, we moved our office from Hong Kong to Singapore following our investment in Gurin Energy, a Pan-Asian renewable energy developer and operator. We're now expanding in Asia, supported by a team of 7 professionals in the region and backed up with a global team of around 220 people across North America, Europe, Asia Pacific, Australia, and New Zealand. And we are excited about the opportunities that this brings. I'd now like to take a moment to introduce our Morrison Value AddⅡ Fund, known as MVA2. MVA2 is Morrison's 8th investment vehicle. It's our 5th close-ended fund and our 2nd global value-add infrastructure fund. It is a global infrastructure strategy focused on the middle market, which tends to be infrastructure businesses with a total enterprise value less than $1 billion. This fund leverages Morrison's 30-year value-add track record, which has delivered a net IRR to its investors of 18%, which is after all fees. MVA2 is targeting a 16 to 18% gross return, that's net 13 to 15%, and these returns are quoted in US dollars. We are targeting a $2 billion fund that is first diversified across developed countries in North America, Europe, and Asia Pacific, and second, diversified across the key long-term thematics that Morrison has deep expertise and conviction in, especially the energy transition, digitalization and connectivity, and global mobility. We believe that this 10-year closed-ended fund will benefit from three key market dynamics. First, the vast majority of infrastructure capital today is focused on larger transactions. By being focused on the middle market, we are investing in a much less competitive area, which increases the opportunity for proprietary deal flow. Second, given the changing geopolitical landscape, we believe it is a huge advantage to have a global scope and to focus across several infrastructure sectors so that we can look for the best global relative value investments. Third, we do believe that the macroeconomic volatility will continue. By focusing on long-duration, uncorrelated growth drivers, we aim to deliver clients an attractive, risk-adjusted return. Now, over the past 30 years of investing, Morrison has focused on three key steps to add value. First, we identify off-market opportunities early from in-house, research-driven insights. Second, we deploy Morrison's asset management capabilities to scale and de-risk the cash flows of our investments. And third, we optimize exit timing by targeting the right core plus infrastructure buyers who would be attracted to a larger, de-risked business in a growth area of the market. Now, there are several examples where we have done this throughout the world, but I'll highlight just three. First, CDC is an Australian and New Zealand data centre platform that we identified over 10 years ago before others were focused on the sector. Given its long-term government contracts, it had the downside protection that we were seeking, along with the upside associated with the growth in data. Now, we have delivered a 39% return and over 5x multiple of money to our investors. Second, Longroad Energy is a US renewable platform that we built by backing an experienced management team 9 years ago. And like the prior example, this was sourced on a bilateral basis. We have grown this platform materially from the initial operating assets that we purchased soon after starting Longroad. The IRR for this investment has been over 50%, and the multiple of money is 2.9x. Third, Gurun Energy is a pan-Asian renewable energy developer and operator that Morrison established in 2021. Our strong network in renewables meant that a proactive early approach from Morrison created a team lift opportunity. Gurun has grown significantly and has over 8 gigawatts in the pipeline, including 500 megawatts of battery energy storage systems in Japan, with grid access secured for the first 240 megawatts. The IRR for this investment has been 80% since inception, and the multiple of money is 2.7x. Like our first value-add investment vehicle, MVA2 is focused on delivering a diversified portfolio across key developed markets that will benefit from the fastest growing subsectors that we have high conviction in. Of course, each of these investments will need to have significant downside protection in order to fit our infrastructure requirements. During the 5-year investment period, we will target subsectors in which we currently manage investments, but we will also be focused on assessing new opportunities where infrastructure protections are developing in areas such as supply chain logistics that benefit from automation, edge data centers that are becoming developed for new use cases, and green fuels that are becoming more economic to power the shipping industry. Now, our global team have identified over 350 opportunities, of which over 120 fit the MVA2 profile. Currently, 36% of these are in North America, 34% are in the Asia Pacific, 27% are in Europe, with the remainder being global platforms. From this pipeline, we will filter down to 8 to 12 top priority investments that, when combined, are expected to maximize risk-adjusted returns for the portfolio. 85% of these fall into our top 3 areas of energy transition, transportation and logistics, and digital infrastructure. Many of our top opportunities are what we would call classic Morrison deals. These are investments within one of our key thematics, where we have in-house operating capabilities that can be leveraged to add significant value to a management team in order to grow the platform and de-risk it during the holding period. Now, these capabilities are more unique to middle market managers than you might think. As a result, it often leads to bilateral discussions with corporates who are assessing carve-outs of infrastructure businesses that sit within their company, or to bilateral discussions with management teams who are looking for strategic partners, not just capital, in order to grow those businesses. Now, I appreciate the time that you've taken to learn about Morrison and this fund. We look forward to answering any questions that you may have, either about Morrison or the Morrison Value Add 2 product. And thank you again for your time.